500 or so rich men in the Congress are engaged in some most serious debate, along with a few thousand lobbyists. They will now decide the world's fate. They say we're running out of dough, and the people all must take another hit. Well, there are some things that I know, and what they're saying is, I'm not a mathematician, but one doesn't have to be too deft to see if 1% of us owns half the wealth. That leaves 99% to share what's left. And then if 60 cents on each tax dollar is buying bombs to blow the planet into bits, then I think we need to grab them by the collar and patiently explain to them that that's tax the rich, tax the rich. Close the loopholes so none of them can fudge it. Bring 'em home, bring 'em home, and eliminate the military budget. They say we cannot pay for health care, nor for decent schools to educate the kids. Sorry if you don't have shoes to wear, but this recession has just left us in the skids. They say we can't afford those windmills after all, so just stiffen up and show a little grit. And if climate change and poverty have gotten you down, just sing, oh say, can you see? Tax the rich, tax the rich. Close the loopholes so none of them can fudge it. Bring 'em home, bring 'em home, and eliminate the military budget. They say we've gotta fight those terrorists. They say we've got to send our kids to war. Just ignore that corporation behind the flag and don't ask us what the hell they're fighting for. I hear GE is subsidized, leaving us fools to pay for it. They shirk their duties while we downsize. I know what that's called. Tax the rich, tax the rich. Close the loopholes so none of them can fudge it. Bring 'em home, bring 'em home, and eliminate the military budget. Tax the rich, tax the rich. Close the loopholes so none of them can fudge it. Bring 'em home, bring 'em home, and eliminate the military budget.
And that was David Rovics with Tax the Rich. Greetings and welcome to Bernie 2020. This is an independent podcast on progressive politics inspired by Bernie Sanders and progressive and radical activism. This podcast is completely independent of any candidate, party, PAC, or political organization. If you want to reach out to me, you can send me a message. You can find a link to send an email at bernie-2020.com. You'll also find all of the back episodes posted there, and you'll find some links to make a donation. You can also follow on Twitter at BernieUS2020. This is another special episode of Bernie 2020. Bernie Sanders has issues. We're going to cover two of the issues that Bernie Sanders has today. You can find all of Bernie Sanders' issues at berniesanders.com/issues. First up is a tax on extreme wealth. In order to reduce the outrageous level of inequality that exists in America today and to rebuild the disappearing middle class, we must establish an annual tax on the extreme wealth of the top 1/10 of 1%. Key points. Establish an annual tax on the extreme wealth of our top 0.1% of U.S. households. Only apply to net worth over $32 million, and anyone who has a net worth of less than $32 million would not see their taxes go up at all under this plan. It will raise an estimated $4.35 trillion over the next decade and cut the wealth of billionaires in half over 15 years, which would substantially break up concentration of wealth and power of this small, privileged class. Ensure that the wealthy are not able to evade the tax by implementing strong enforcement policies. Details. Today, the United States has more income and wealth inequality than almost any major country on Earth, and it's worse now than at any time since the 1920s. At a time when millions of Americans are working 2 or 3 jobs to feed their families, the 3 wealthiest people in this country own more wealth than the bottom half of the American people. Over the last 30 years, the top 1% has seen a $21 trillion increase in its wealth, while the bottom half of American society has actually lost $900 billion in wealth. In other words, there has been a massive transfer of wealth from those who have too little to those who have too much. For the sake of our democracy and working families all over America who are struggling economically, that has got to change. In order to reduce the outrageous level of inequality that exists in America today and to rebuild the disappearing middle class, the time has come for the United States to establish an annual tax on the extreme wealth of the top 1/10 of 1% of U.S. households. This wealth tax would only apply to net worth over $32 million and would raise an estimated $4.35 trillion over the next decade. Anyone who has a net worth of less than $32 million would not see their taxes go up at all under this plan. The revenue raised under this plan would be used to fund Bernie's affordable housing plan, universal child care, and would help fund Medicare for all. How the tax on extreme wealth would work. This tax on extreme wealth would have a progressive rate structure that would only apply to the wealthiest 180,000 households in America who are in the top 1/10 of 1%. It would start with a 1% tax on net worth above $32 million for a married couple. That means a married couple worth $32.5 million would pay a wealth tax of just $5,000. The tax rate would increase to 2% on net worth from $50 to $250 million, 3% from $250 to $500 million, 4% from $500 million to $1 billion, 5% from $1 to $2.5 billion, 6% from $2.5 to $5 billion, 7% from $5 to $10 billion, and 8% on wealth over $10 billion. These brackets are halved for singles. Under this plan, the wealth of billionaires would be cut in half over 15 years, which would substantially break up the concentration of wealth and power of this small, privileged class. Under current law, the IRS is already required to assess the net worth of the wealthiest Americans when they pass away to calculate estate tax liability. A federal wealth tax would require the IRS to make the same assessment on an annual basis for the wealthiest Americans. Steps would also be taken to streamline the process for purposes of the wealth tax. For assets that are difficult to appraise, the Treasury Department would have the option of allowing taxpayers to have appraisals done periodically instead of annually. The Treasury Department would establish the average rates of appreciation for several classes of assets. Those appraised only every few years would be assumed to appreciate in the intervening years at the average rate established for their designated class. Assets placed in a trust would be treated as owned by the grantor of the trust, by the person giving assets to the trust, until that person's death. A wealth tax is enforceable. In order to ensure that the wealthy are not able to evade the tax, the proposal includes a number of key enforcement policies. First, it would create a national wealth registry and significant additional third-party reporting requirements. Second, it includes an increase in IRS funding for enforcement and requires the IRS to perform an audit of 30% of wealth tax returns for those in the 1% bracket and 100% audit rate for all billionaires. Third, the wealth tax includes 40% exit tax on the net value of all assets under $1 billion and 60% over $1 billion for all wealthy individuals seeking to expatriate to avoid the tax. Finally, the wealth tax proposal will include enhancements to the international tax enforcement and anti-money laundering regime, including the strengthening of the Foreign Account Tax Compliance Act. A wealth tax is constitutional. Since 1916, we have taxed the inherited wealth of the richest people in this country through the estate tax. For more than 100 years, we have taxed investment income from capital gains and dividends. In order to reduce extreme inequality, we must also establish a tax on the net worth on the top 0.1%. Bruce Ackerman and Ann Alstott, two highly respected Yale law professors, have both written in support of a wealth tax on the richest Americans in this country. Here is what they wrote for the Los Angeles Times on September 20, 2011. Quote, "In the United States, anti-tax zealots will try to use the Constitution to cut off debate about a wealth tax before it begins. Article 1, Section 8 grants Congress plenary power to impose any and all, quote, taxes, duties, imposts, and excises. But it contains a special limitation on capitation and other direct taxes. Under this little-known proviso, such taxes may be imposed only if they are apportioned among the states according to their population. This provision was part of a compromise with the slaveholding South, and its intention was to prevent the North from imposing a head tax on slaves because this could not be apportioned equally among the population of all the states. Given its origins, this provision has consistently been construed very narrowly by the Supreme Court, which has found only head taxes and real estate levies to be within its scope. Given this history, it is extremely unlikely that the justices will cite the founders' original compromise with slavery to bar a tax that would serve the cause of economic inequality and democratic legitimacy. The Roberts Court may be conservative, but it's not quite as reactionary as all that." Many more articles, including a very recent one published in the American Bar Association, make the unambiguous case for the wealth tax's constitutionality. Demanding that the wealthiest Americans pay their fair share isn't radical. The reality is that we already have a wealth tax in America, the property tax, and it disproportionately impacts working-class families. One of the biggest sources of wealth for middle-income families is owner-occupied homes, which are taxed in most states at rates that can be as high as or even higher than 1%. Meanwhile, the vast majority of the wealth owned by the top 0.1% of Americans is not housing or real property and is not subject to any sort of property tax. This proposal would ensure that assets owned by the top 0.1% are taxed in the same way as much of the wealth owned by the middle class is already taxed. So that is a text of Bernie's policy and plan on tax on extreme wealth. And there's another shorter policy that he has published on at berniesanders.com/issues, and that is the Sanders Income Inequality Tax Plan. The American people want corporations to invest in their workers, not just dividends, stock buybacks, and outrageous compensation packages to their executives. Key points. Companies with large gaps between their CEO and median worker pay would see progressively higher corporate tax rates. Apply to all private and publicly held corporations with annual revenue of more than $100 million. Details. In the 1950s, CEOs made 20 times more than their median employees. Last year, the average S&P 500 CEO made 287 times their median worker pay. Workers in this country should not be paid totally inadequate wages, while CEOs make outrageously high compensation packages. Bernie's income inequality tax plan raises taxes on companies with exorbitant pay gaps between their executives and typical workers. Today, the SEC requires companies to disclose their CEO to median worker pay ratios. As a result, we now know that Walmart's CEO made $23.6 million last year, 1,076 times more than the median Walmart workers' $21,952. Jamie Dimon made over $30 million last year, 381 times more than the median JP Morgan Chase's employees, $78,923. Home Depot CEO made more than $11.4 million, 486 times more than the median Home Depot employees, $23,389. Nike's CEO was paid over $9.5 million in 2018, 379 times more than the median Nike employee's earnings of $24,955. American Airlines CEO made almost $12 million last year, 195 times more than the median American Airlines employees, 61,527. Under the new Sanders plan, companies with large gaps between their CEO and median worker pay would see progressively higher corporate tax rates, with the most unequal companies paying 5 percentage points more in corporate taxes. Specifically, this plan would impose tax rate increases on companies with CEO to median worker ratios above 50 to 1. If the CEO did not receive the largest paycheck in the firm, the ratio will be based on the highest paid employee. The tax penalties would begin at 0.5 percentage points for companies that pay their top executives between 50 and 100 times more than their typical workers. The highest penalty would kick in for companies that pay top executives over 500 times worker pay. These rates, if current corporate pay patterns continue, would raise around $150 billion over 10 years. How companies' corporate taxes would increase if their compensation ratio is between 50 and 100 plus 0.5%, between 100 and 200 plus 1%, between 200 and 300 plus 2%, between 300 and 400 plus 3%, between 400 and 500 plus 4%, and more than 500 plus 5%. If this plan had been in effect last year, McDonald's would have paid up to $110.9 million more in taxes. Walmart would have paid up to $793.8 million more in taxes. JP Morgan Chase would have paid up to $991.6 million more in taxes. The Home Depot would have paid up to $538.2 million more in taxes. And American Airlines would have paid up to $18.8 million more in taxes. This plan would apply to all privately and publicly held corporations with annual revenue of more than $100 million. The Treasury Department will be required to issue regulations to prevent tax avoidance, including by changing the composition of a firm's workforce. In addition, the pay ratio data for privately held corporations will be made public in the same manner that it is currently disclosed for publicly held corporations. The revenue generated from this income inequality tax will be used to pay for Bernie's plan to eliminate medical debt. But the goal of this income inequality tax is not just to raise more revenue. It is to send a message to corporate America. Stop paying your workers inadequate wages while CEOs make outrageous compensation packages. The American people want corporations to invest in their workers, not just dividends, stock buybacks, and outrageous compensation packages to their executives. That is what this plan is all about. And that'll wrap up this episode of Bernie 2020. Bernie Sanders has issues. Once again, if you want to reach out to me, you can follow on Twitter at BernieUS2020. And you can go to Bernie-2020.com. There you'll find all those back episodes and a link to send me a message. Here is David Rovics with the song Corporations Are People Too. Thanks for listening.
A corporation doesn't have to feed a family. A corporation cannot be unemployed. A corporation can't get carpal tunnel syndrome, heart disease, brain tumors, or hemorrhoids. A corporation is set up with one motive, and that is not to judge who's right or fair. A corporation's only goal is making money. That's why a corporation doesn't care. A corporation can never sense the breeze upon its skin, never know what it's like to miss a meal. A corporation doesn't have to worry, because a corporation cannot feel. A corporation can never know the beauty. It cannot wake up in a grove of ancient trees. It only sees $100,000 and some mill jobs it can ship out overseas. A corporation can't care for a child sickened by a toxic oil spill. A corporation only stands to profit from interest on the loan for the hospital bill. A corporation never goes to funerals of any victims who may die along the way. A corporation cannot feel remorse. A corporation never really has to pay. A corporation doesn't have a mouth, but it often has many a mouthpiece. A corporation cannot shoot a gun, but it can employ an army of police. A corporation can never go to prison, no matter how horrible the crime. But a corporation can send lobbyists to Congress to make sure that more of us are doing time. A corporation doesn't feel the pain of a child raised by a TV set, and the corporations will just get bailed out if their clients fall too deeply into debt. Corporations can't be rounded up and shot. A corporation can't be tortured through the night. A corporation can't be blown up by an IED. A corporation cannot even see the sight. A corporation can't be killed by a tsunami. A corporation cannot drown beneath the tide. A corporation doesn't care who wins the war if they can just sell weapons to both sides. A corporation exists only to make money. A corporation never questions why. A corporation doesn't suffer consequences because a corporation doesn't live and doesn't die. corporation doesn't have to